Well, the headline messaging from IT companies is very simple, that growth is here and growth is here to stay, and this is a multi-year cycle. So from a headline messaging standpoint, numbers have been exciting. Now let's do a relative comparison, not an absolute comparison. On an absolute comparison, it is evident that all IT companies are growing, they can manage cost. Attrition is a worry, but that is manageable, and they are able to keep the margins under check. So the whole wage inflation challenge, which we thought would have hit IT companies for the quarter gone by, I think it is manageable. Let's do the relative comparison now. Very important. Markets always look at relative, because on a day when you have three companies, when they come out with numbers, you will have to look at the relative comparison. And the relative comparison is Infosys is right at the top. They've hit a home run. All round beat, strong guidance. The indication from Infosys is clearly very strong in terms of where the margin picture is headed, where the business is headed, and the kind of deal wins they are getting. So based on Infosys numbers and the fact that it is trading at a discount to TCS, is there a case for Infosys now to start catching up? And I would also imagine that now that TCS has declared a buyback from Infosys very soon cannot be ruled out. So is this more than an absolute upgrade based on earnings? Could this be a P re-rating moment for Infosys? TCS, well, the Q1 was disappointing, Q2 was decent, Q3 is when growth seems to be coming back. Can they really build on that growth? They're doing all the right things in terms of managing the cost. They're doing all the right things in terms of getting growth back. If attrition comes down, will FY23 be a year of low wage inflation and uptick in margins? They're planning to do the buyback at a decent premium to the market as well. So the management perhaps feels that there is still some more value left in the stock. So now that growth is coming back after 2 quarters of some disappointment, can TCS also regain its mojo? Wipro, absolute basis, well, they're growing. On a relative basis, well, they're the bottom of the heap if I compare the top 3. The margins are just below 20%. Below 20%. The deal order win, again, on a relative basis is not as strong as what others have reported. So Wipro, I'm afraid, today could see a little bit of price adjustment. But at a decline, Wipro also in my book will qualify as a buy because it is still cheap. The scope of turnaround is very strong. When you are in a strong environment where tailwinds are strong, Indian IT companies will be able to really maximize on it. So Wipro, there still is work in progress in terms of where it could reach in terms of meeting the industry averages. That is my assessment of how IT numbers have come out. Now the debate which we will do in coming days is that how much of the good news is in the price. IT is an overbought sector, but when you get these kind of numbers and the numbers are surprising you, it warrants for outperformance, not just a hold.